can already feel the comments coming and saying that I'm a bear.
Oh yeah, no, you're going to get slaughtered for these weak
Yep.
assumptions on the energy.
Sorry, guys. Sorry. I'm sorry.
When I run the numbers, it is clear that Tesla could make more money if they did this alone without any partners, without us owning vehicles. To me, this is Tesla telling us that we recognize that this is such an incredible opportunity that we need to spread the wealth around, because if they take it all for themselves, they're going to be so profitable and so enormous that they become this big target.
Everyone thought the internet was going to, take everyone's jobs, and then actually the internet came and gave so many jobs.
That's right.
But it's going to be abundance of work. It's going to be abundance of making money, however you want to make.
I would say by 2035, Tesla's, by your numbers, produced a cumulative number of 163 million vehicles.
Yeah.
Let's just be conservative and say 100 million of those are actually operational at that point.
Oh my God.
Okay. It's easy for me to see that by then at least half of them would be autonomous.
Cern Basher, thank you for coming on again. For anyone who doesn't know who Cern Basher is, then I don't know where you guys are, maybe living under a rock or something, but he is pretty much tearing it on Herbert's channel, talking about Tesla left, right, and center. He's become a superstar in the Tesla community, and I had to get him back on my channel, this time talking about 2035 stock price. And he sent me a whole list of questions. I took my time and I got back to him, and he made a PowerPoint and just a whole bunch of charts and numbers we're going to go over today. It's going to be a sheesh moment. It's going to be insane. Cern, you don't have a YouTube channel, do you?
I'm a YouTube squatter, Pejjy. I just squat channels like yours and Herbert's and Randy's and others.
You should have a channel. No. I think no, come on.
No.
All right. So then your X account is linked in the description. I recommend you guys go follow him. He has some awesome research. He does a lot of good stuff. Let's get down to it, man. Is there anything you want to say, Cern, before we start with this 2035 stock price prediction?
Yes. Well, first of all, thank you for having me back.
Pleasure.
It's an honor to be on your channel. I really enjoy your channel and listening to your shows and so on. So thank you for having me back. I think your viewers are going to find this one to be quite interesting. And what we're going to present today is your Tesla business valuation model based on your assumptions. So if people don't agree with them, don't get upset with me. These are not my numbers. These are yours.
Bring it on. Let's see what it is. Hey, I try to keep it as hopefully as realistic as possible, as well as much as conservative as much as possible. So let's see what happens. So are you ready? If you guys are, smash that like button, hit subscribe. Let's go. All right. So here's a little chart. I'm going to go ahead and make it full screen. Blah, 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 blah. There we go. Cool.
So I don't know about you, Pejjy, but I like cash machines, right?
Me too.
And I think what we're talking about with Tesla has the potential to be a cash machine like the world has never seen. And so let's put some numbers to this cash machine and see how it looks.
Some people call this a cash glitch. Could
be. We'll see. At some point, I'm not even sure what money will mean in the world, but let's put that issue aside for now.
That's like what Elon says. Yep. All right.
So as your viewers likely know, Tesla is riding some pretty big waves. And on the next chart, kind of show an image of that Dave Lee put together some time ago. There's the EV S-curve of technology adoption for EVs, and we're kind of going through that now. Some countries are way ahead of others. Norway is towards the end of the curve, and other countries like the United States and places like that are just really getting started. And then we have the next wave, which we're all excited about. That's FSD, Robotaxi, right? And that may start here in the US in the early stages next year. And then we're also at the same time have this energy storage wave. And then, of course, AI robots, the humanoid robot Optimus for Tesla, that is likely to be the biggest wave of them all. So this is all sort of happening with Tesla kind of all at once. And so let's do some modeling and kind of see what the future impact could be on Tesla's valuation.
Let's do it.
What we're also going to do, though, is test various things. We want to leave here today with an understanding of the impact of a whole bunch of different assumptions. And I'll take you through these sort of one by one. But, how long should we model out the company's life? Does it matter if we model out 20 years versus 60 years versus 100 years? What difference does that make? Long-term growth rate assumptions, right? If a company is growing at 10% long-term versus 12%, what kind of a difference does that make? The discount rate, how much should you expect in investing in stocks? Therefore, what's your required rate of return? This is the rate that you discount future earnings back to the present. So that's an important one to take a look at. And then other things like shares outstanding dilution. If the company continues to issue stock options and compensation plans for Elon Musk and other executives, what's the impact of dilution? And then offsetting that, stock buybacks. As Tesla has more free cash flow, if they start buying back stock, what's the impact of that on the valuation? And then the last one, which is kind of fun, is the impact of the return on cash as they build up cash on their balance sheet. And also, let's take a look at then what the return would be if they invested in Bitcoin and what the impact on that might be.
Oh, Bitcoin, another one. I noticed Bitcoin and Tesla, they always dance around each other in terms of valuation, or in terms of return, which is really interesting to me.
Yeah, they're both fast-moving trains, as I like to say.
Except one is a productive asset, while the other one is like the store of value.
Right.
It's crazy.
Yep. So here is a result from your model, and we'll dive into this in a minute, but this is one of the outputs. And this shows Tesla's profit potential from now through 2035, based on your assumptions, for each of 5 different business lines: autos, energy, the service and other. Those are the 3 existing business lines that Tesla reports on every quarter. Right, so that's the yellow, the lighter blue, and the green on this chart. And then we're also going to model out the future businesses of Robotaxi and Optimus. That's red and the darker blue on this chart.
Yeah.
And just for a little splash of color, I also included a couple of other small businesses that actually don't really factor in the model too much, but AutoBidder, which is AI-powered software on the energy storage side, and AI inference that's using the chips in the cars and the robots when they're not in use to run AI models. It makes this chart look pretty if I include those 2 on there, but it's not really significant value drivers, I don't think.
Wow.
Okay, so we're looking at a company that's potentially going to produce, based on your assumptions, $600 billion a year in profit by 2035.
That's insane.
Okay. And you can see that the auto business, based on your assumptions, was pretty good, and Robotaxi's about the same. But the biggest value driver here is Optimus.
Yeah.
Even with your extremely conservative assumptions.
That's crazy.
Is any of this surprising to you so far, Pejjy, with the information that you sent to me? Are you surprised to see this?
Well, I've always known that the bigger chunk of Tesla's earnings would be manifesting in the 2030s. I've always known this, but when you look at it, at the chart, and then you look at, like, we're going to 2025, it's nothing compared to, what's going to happen, or what could happen. So when you put it visually out like this, it's like, wow. I mean, this is why Tesla stock is a long-term hold. That's why it should always be a long-term investment, at least 2030 and beyond. Something that I preach a lot on my channel. So this is a very good visualization, and this is what I kind of think as well. Now, energy storage. I know in the first or in the second in the second chart there was FSD Robotaxi, and then we had the energy storage much bigger than the FSD Robotaxi. I personally, I just don't see that. I see the Robotaxis being and the FSD being a whole lot bigger than the energy.
Yeah, and this is reflective of that in this chart.
Yeah.
If you look at the energy storage on here, the lighter blue, you've got a small, a pretty small area there under this curve is for energy storage.
Yeah.
Your services and other business, actually, you have higher expectations for that business than you do for energy.
Yeah.
Which was frankly a little surprising to me, but that's okay. We all have different views on how we think Tesla's business will evolve.
What are your thoughts? I'm curious about your thoughts.
Well, I think you've seen my numbers, and I believe that energy longer term will probably be about the size of autos.
Okay, so that's
I'm a little bit more conservative on the services and other, and my numbers for Robotaxi and Optimus are far larger than yours.
yeah,
But we'll get into
yeah,
that in just a minute.
yeah. Makes sense. Makes sense.
Okay. So let's dive into then the 5 main drivers of this. So let's start with autos. These are your numbers. So from
Yeah,
2025 on, this was the numbers that you gave me. So you've got Tesla producing 2.2 million vehicles next year, and then you're growing that up by 2030 to 13 million, and then to 2032 you're at 25 million, and then you just held that constant for 4 years out to 2035.
yeah,
Okay, so pretty solid growth out to 2032, and then essentially no growth thereafter. You also gave me some assumptions for average selling price, and you have that going from 39,000 next year down to 28,000 per vehicle. You also gave me margin assumptions of 14 to 15%.
yes.
So that's plugged in here, and so you've got net profit in the auto business growing from about 11 billion this year out to about 105 billion by 2035.
10x almost.
Yeah. Now, what I've done there in the blue column with the PE ratio, if we just take a look at, if you assign a PE ratio to the earnings each year, and I've starting, in 2024 at about 60 and then taking it down to 15 by 2035, you can see then what the market value of just the auto business might be if you use those PE ratios. This is a very simplistic, crude way of doing this, but it gives you a kind of an indication of what the value of autos could be over time. And as it stands right now, auto business may be worth, $680 billion. And based on your assumptions, goes to about 1.6 trillion by 2035. Now, whether the PE will be 15 in 2035, who knows? But that seems like a conservative number.
Really, even for autos?
Yeah.
Wow.
If the profitability remains at this level of 15%.
Wow.
If the profitability is worse than that, then the PE ratio would come down.
True. That's true.
Yeah.
Okay. Yeah. That's it. Yeah. This is That sounds about right.
This is one method to kind of look at what the value of the business will be over time. We're going to look at another method that actually calculates the present value of everything today. And for that, we don't use the PE ratio. So we'll come back to that in a minute. But so this is autos.
Okay.
Let's now take a look at energy.
This is energy. Yes.
Yep. And in 2030, storage deployed could be something like 30 gigawatt hours in 2024. And you had going to 45 next year, and then growing that up pretty steadily. Not a huge growth rate, 40s, high 30s, and then dipping down to the teens, and taking you basically to 320 gigawatt hours of storage by 2035.
Yeah. I'm assuming here that Tesla's gonna have 8 megapacks. That's what I'm assuming. 8 megapack factories somewhere around the world.
Mm-hmm.
And each at 40 gigawatt per hour, maxed out would be at 320 gigawatts per hour. It was hard to calculate the power wall and the solars and all that kind of stuff. So this is excluding that. It's just the megapacks, purely the megapacks.
My numbers on energy are 10 times higher than yours in 2035. I've got 3 terawatt hours.
That's crazy. And how many megapack factories do you think that would?
Well, if each factory only produces 40, then it's 10 times the number of factories that you've estimated.
80. Yeah. Oh my God.
Yeah.
Oh, that's gonna be crazy.
I think each factory though will become more productive. They'll probably produce 100 gigawatt hours out of each factory or something at some point. And we may get the first sign of that with this new Shanghai factory. It seems to be a lot bigger than the Lathrop one, and therefore probably will have a much higher capacity.
Yeah, that'll be If there's that fundamental shift in that, then definitely, this 320 is like very conservative in this point.
Yep.
But that's how I thought about that. But let's see.
Yeah, that's going to be interesting. And so same process here. We took average selling price, calculate the revenue, and then we took a net margin number of 15% to calculate profit, applied the PE ratio to it. In this case, starting at 60 in 2024 and going down to 20, and you get to, in 2035, energy storage value of about $240 billion. And my number again is about 10 times higher than that at that point.
Yeah, I can already feel the comments coming and saying that I'm a bear.
Oh yeah, no, you're going to get slaughtered for these weak assumptions on energy.
Sorry, guys. Sorry, I'm sorry.
Yeah, I mean, Elon himself has said that he thinks energy will be as big as the auto business at some point.
Yeah, and
right?
hey, I mean, at this in this scenario, they're kind of matching. So I guess let's see.
Yep. No, it's fine to be conservative. Yep.
Yeah.
All right, so that's energy. Now the next one is services and other. Think of this as supercharging and maintenance and so on in vehicles. You may also have something else in mind here because you've got revenue growing from 11 billion this year up to about 200 billion,
Yeah.
and your margins going up from basically break even to 19%. This is actually the highest margin of the three businesses we've looked at so far.
Yeah.
And if you apply a PE ratio of 15 to a profit of 38 billion, you get to about half $500 billion of market value in this business, which is
Yeah.
more than your energy number. So I'm curious as to what your thinking was behind this.
Yeah, so the thinking behind this was like obviously superchargers. That's gonna become, one of the main ways that Tesla can generate a decent amount of profit and scale. Obviously, the more cars Tesla has on the road, the more services they need to put it. Yeah, the more services they need, whether they get into an accident or whatever that needs to be. I mean, if we're projecting, or in this case, in this valuation, we're projecting 25 million cars to be delivered every single year in the mid 2030s. That's a lot of cars that needs to be serviced, and I can see the profit margin being pretty high. And then you got the cyber cabs, and then the robo van, and some other vehicles out there that's robotaxis that I'm sure will need to be serviced as well. So that was my whole thought of it. And we already are seeing service profits growing nicely year over year as well, quarter and quarter. So that's why I think it makes sense for services to continue growing at a much accelerated rate because it's a service, right? I don't think it's not something that they can just reduce the price on. It's something that you have to charge your car, you have to get your car fixed, and all that kind of stuff. So that's why I didn't hold myself back with the services. So that was the idea of it.
I was curious if you included FSD licensing in this. Is that part of your thinking? No.
No. That'll be under Robotaxis alone.
Okay.
Yeah.
So it's interesting because your 2035 profit of $38 billion is about 35% of the auto profit in that year. So that doesn't seem crazy to me.
Yeah.
Right. As you say, the fleet will only be bigger each year. So there should be more service revenue.
A much higher margin as well.
Yeah. So this may actually cause me to revise my numbers up a little bit. I think I was much more conservative.
I caught you there, sir.
You're persuasive, Pejjy. You've given me some good reasons to revisit this.
There we go. Well, I mean, you're giving me good reasons to change or revise the energy.
Yeah. I think you might want to revisit your assumptions there.
Yeah, I probably have to.
Let's look at the fourth one, Robotaxi.
There it is.
Yep. So here we're starting with your auto production numbers or sales numbers that you had from the first table, but we're looking at now the autonomous fleet size, which is a different thing, right? Only a portion of those vehicles that are produced will go in the autonomous fleet, and you're starting with 1,000 vehicles next year.
Yeah,
you're going at to 10,000 in 2026. By 2030, you're at 400,000, and by 2035, you're at 6 million. So again, this is quite a bit lower than what I have.
That's what I was going to ask.
Yeah.
Because it's like we know it's going to come, but I just don't know how fast it's going to come. You know what I mean? Like, this is the part that I'm sitting here and I'm like, okay, 2025 next year, they're going to start in 2 or 3 states with the current ones.
Yeah.
Sure. And then in 2026, 2027, they're going to start volume production of the cyber cab. But obviously, they can't just produce 2 million in a year. I mean, this part, I just don't think that's realistic. Or maybe it is. I've never seen it before. I know the way how they're going to make the cyber cab is like 2 to 3 times faster than what they currently make in their current factories, or just traditional cars, how they make cars, because of the unboxed version and stuff. But even then, like it's gonna take a couple of years for it to scale to 2 million, 4 million. So I took a conservative approach. I'm like, okay, next 2026 we can do 10K and then 5x it and then double, and then let's see what happens.
Yeah.
But that's how I did it. But I can see why this is good. Yeah.
I think that's interesting. Here's what I would share with you. I would say, well, okay, the issue I think is one of timing, But once we get to the point where robotaxis are viable and safe and capable of driving, I think the switch will happen very quickly at that point. Because what happens is you're now creating a form of transportation that is way cheaper than what everybody has today, right? So I would say by 2035, Tesla's, by your numbers, produced a cumulative number of 163 million vehicles.
Yeah.
Let's just be conservative and say 100 million of those are actually operational at that point.
Oh my God.
It's easy for me to see that by then at least half of them would be autonomous.
Wow.
Right. So you're 6 million.
Million
to me,
is
that should
nothing.
be more like 50.
Yeah. And
Right.
that's
Now,
crazy.
I don't know what's going to happen in 26, 27, 28. I don't know the near term, but to me, when you look out to 2035, if FSD, by then, obviously, it's a lot more years of development too. But at some point, it becomes so cost competitive and just blows everything else away. The world is going to switch at that point very quickly. So I agree with you in terms of the slow ramp, but I quibble with you a little bit in terms of your 2035 number. I think it's very low. Yeah.
Yeah, that makes sense.
Even your crazy conservative numbers result in a valuation here of about $5 trillion.
Which is crazy.
Yeah.
Which is absolutely nuts.
And I assigned a PE ratio of 50 there in 2035 because at 6 million, you're just getting started.
Yes.
Right.
Yes.
In my case,
I think that's probably too low.
Yeah.
That's crazy.
So anyway, that's fine. This is still this is already the largest component of your valuation right here in Robotaxi.
Yeah.
Right. So that's great from a valuation standpoint. You've actually got the auto business still making more money at this point. You've got your auto business is making $105 billion, and you've got Robotaxi making only 96 billion. I think that's extremely conservative.
Yeah, we need to increase that. When you put it that way, you're right.
Yeah.
This is why we have Cern here. Yeah.
Right. To poke holes in all your assumptions.
Yes.
I'm sorry.
Yes.
Yeah. You might not have me on your channel again for another year.
Oh no. No, you're always welcome. You're always welcome. Always bringing awesome value. Yes.
So let's now then shift to the third value driver, Optimus.
Optimus.
Right.
And here we go.
Here are your assumptions. We've got 1 in 2035. Sorry, 2025. And then you're jumping it up to 15,000 2026. I'm sorry. I think I put the 1 in there just to have a starting value. But you're looking at 15,000 sold in 2026 or deployed in 2026. And then growing by 2030 up to 500,000. And then up to 16 million in 2035.
Yeah.
So on the surface of it, 100% growth a year for 10 years is pretty crazy to think about. Okay?
But is it though?
Well, we'll get there in just a second. Hold that thought. If we just follow your numbers, then you're getting a net profit of about 319 billion, which is 3 times your auto number in 2035. And a PE of 50, that gets you to a $16 trillion market cap just for Optimus. And that's on a fleet of 32 million bots deployed at that point.
Yeah.
Okay. Now, that sounds like a big number, but I don't think it is. And for this reason, if you skip to the next page, I graphed out your assumptions for auto deliveries in green with your assumptions for bot deployments in blue. And when you look at it this way, you say, well, okay, my bot deployments are 2/3 of my auto numbers by 2035. It took a while to ramp up auto production. Therefore, it may take a while to ramp up bot production. But if you think about how bots and autos are different, for one, the weight. A bot is about 3% of the weight of a Model 3, about 3% of the batteries of a Model 3, and probably easier to move a lighter mass around a factory. You probably don't need as big of factories. You can probably have more factories. And bots probably are easier to make. We stamp out a lot of cell phones every year, right? The industry doesn't have any problem making, 250 million cell phones each year, and probably would make more if there was more demand, right? So that's going to be the key thing, is where's the demand. But in terms of the ability to produce bots, I think it's far exceeds the ability to produce vehicles. And if we look at the next page, if we factor in the fact that for every auto you make, you can probably make 20 bots, your bot production numbers now in terms of autos is so low. You're only making about 3%. Your bot production and auto equivalents is only about 3% of the cars you're making. So I think your numbers are extremely conservative on the bot production side.
Wow.
Okay.
Wow.
But that's okay. You're still at, a big number.
Yeah, I mean, it's hard. It's hard to me. Robotaxis are, well, because they're closer, and that's the reason why I went all into Tesla stock. The bot is just like, okay, it's very nutty. So it's like the numbers are so big. It's too good to be true. You know what I mean?
Yeah.
Like, because it's such a nutty sector or a nutty industry to get into. So that's why I was like, okay, maybe we can do this much, that much. But looking at this chart, it should be a whole lot more.
It could be. If the demand is there, it will be more. Now the question is, will the demand be there? And the demand will be there, in my opinion, if the bots are capable of doing things that humans are capable of doing. And since we're looking out to 2035, and you look at the bots today, they're kind of stumbling around and they're doing this and that, and they're pretty limited in what they can do. Well, this is another, 11 years of development. That's a long way in technology. That's a long time. So for me, by 2035, it's not much of a stretch to imagine numbers far higher than this. Again, like Robotaxi, it's the early years that I don't know. That's a little fuzzy for me. I don't know when they'll actually sell Optimus and when the demand will start rising on that. That may be a few years from now.
Yeah,
But by
I agree.
2035, I'm highly confident we're going to have a very capable humanoid bot that is competition for human labor. And we've never had competition for human labor before like this.
Oh, it's gonna be a time to be
Right.
alive.
Yeah. That can work 24/7, right? And doesn't have all the issues that humans have and all that stuff, right? We've talked about this before.
Yeah.
Yeah, it's going to be really interesting. Okay. So we've taken a look now at these 5 business units. We've built each one up separately. Let's put them all together and form a valuation for Tesla today. So here is the Pejjy Tesla business valuation model. Ta-da. Okay. And we're going to dive into some of this. But right now, the first column, I'm assuming that the company is around for 60 years, and we'll explore that in a second. I'm assuming 2% growth rate in shares outstanding. I'm sorry, correct
Okay.
that. You assumed 2% growth rate in shares outstanding. You assumed a long-term earnings growth rate of 10%. Initially, you gave me a discount rate of 30%, buying back 30% of stock with their free cash flow and returning 5% on their cash. That gets you to a present value per share of 103.
Ugh.
And the reason is that your discount rate is too high.
Okay.
A discount rate is, yes, it's the investor's required rate of return, but you could also look at it as the company's cost of equity. And Tesla's cost of equity is not 30%. It's probably more like between 12 and 14%.
I gave you 30% for the discount rate?
You did.
Oh man, that was a mistake.
Yep. That's okay. So I took the liberty, at least in the next column, to knock it down to 20.
Okay.
Okay. And at 20%, the only thing we're changing, you get to a present value today of 326 a share. Okay.
Okay.
Let's call that your base case. If your viewers can hold 326 in their minds as a number that your model is put out as the base number, let's work from there and adjust things and see what number we might get to. I think 20% as a discount rate is still too high, but let's just take that as your base case.
Yeah, I think 20% is high. I thought I bought 15%, but anyways.
All right, you said 30. You must have been looking for high returns the day you responded to me. Yeah.
Oh yeah, the returns. I'm like, yeah, I want 30% returns at least. So that's what
Yeah.
it is, right?
And that's,
Oh,
but is that
okay.
your required rate of return, or is that that's too high for a discount rate? It should be maybe mid-teens
Yeah.
at the highest, low teens
Yeah.
at the lowest.
Yeah, this discount rate, 15%, and then rate of return 30%.
And we'll see in a second what impact that has.
Okay.
All right.
Nice.
So now let's take a look at the assumed life of the company, what impact that has. So these numbers here are a little bit different than what we saw on the other page, but what I'm doing on the top row is looking at 100-year life, 80, 60, 40, and 20 years. And I'm showing in this case a base number of 252. The reason that's different than the previous page is because I've got 0 buybacks and 0 return on cash. I'm just isolating on company life based on the 4 factors of the life, the growth rate in shares outstanding, long-term earnings, and a discount rate of 20%. Those are all held constant across changing the life of the company. What I want to show your viewers is that if you look at 80 years, you get the same valuation. If you look at 60 years, you get the same valuation. So it doesn't matter if you assume Tesla will be around for 100 years or 60 years, doesn't matter, you get the same numbers. If you only model out 40 years, you're about 3% less. And if you only model out 20 years, you're now about a quarter less. So at the very least, you want to look at 40-year time periods. In this case, I went with 60. You could also assume that, yeah, I'm only modeling 60, and basically the assumption is Tesla goes bankrupt in year 61. That's another way to think about it. I'm not suggesting they will, but that's another way to think about this analysis, is I'm only modeling out the next 60 years. And if your viewers say, well, Tesla's not going to last 60 years, they'll last 45 years, then fine. It's only about 3% difference. It doesn't make a material difference if you use a shorter time period, is what I'm trying to say.
Yeah, that makes sense.
Okay. And the reason is, if you look at the next page, is that over time, the discounting of the earnings by, in this analysis, 20% per year, makes those earnings 20, 40, 60, 80 years out tiny.
Yeah.
Right? The present value of that is so small that you can just ignore it.
Yeah. Wow.
Okay. And at some point, the discount rate becomes higher than the growth rate, and that's why that chart goes down towards the tail. Okay, so there in 2035 or so, you've got the long-term earnings growth rate of 10%, but you're discounting it by 20. So that's why those numbers after 2035 are worth less and less and less. Even though the company's growing, the present value of those earnings is smaller and smaller and smaller.
Makes sense. Makes sense. That's why we have to lower it. Yeah.
Yeah. But even so, even if your discount rate is 15% and your long-term growth rate's 10, you're still going to have this effect.
Yeah.
Just not quite as severe as what this chart's showing. Now let's look at growth rate and shares outstanding. Now we're back to your base case of 326 in the middle of the chart. That's at a 2% growth rate in shares outstanding, 2% dilution. And on either side, we can explore more or less. If it's as much as 4% growth in the shares outstanding each year, then now your present value is $235 a share versus 326. You've lost $100 a share from just an extra 2% shares outstanding each year.
That's crazy.
The compensation to Elon is twice as much as we expected, or something like that, right?
Right.
And then likewise, if they don't issue any more shares, then the present value is like 475. That makes a difference. Dilution matters. Investors should care about how much stock dilution there is. Yeah,
that's true. I mean, right now the stock was at 3. I think just this year, the stock right now that's around like 460, 470. When it reached 390, we reached the same valuation as it was when Tesla reached an all-time high in 2021 of 414.
Yeah.
So that's a $20 difference or something. Yeah, nearly or more than $20 difference.
Because there's more shares outstanding.
That's shares outstanding. Yeah.
Yep. That's right. Now let's look at the third one, the impact of long-term earnings growth rates. So if you could skip to the next slide, let's vary that from 10%, again, the middle case, in the middle, it gets you to your 326 number, and then lower and higher. If Tesla stock only grows at 6% after 2035, if the earnings only grow at 6% after that date, you can see what that does to the valuation today. It would drop it down to 264. If Tesla is able to continue to grow faster than 10%, let's say 14% per year, that gets you to a valuation of 443. Long-term earnings growth rate matters, but it's not a crazy difference. It seems to be within reason. Obviously, if the company grows faster, it's worth more. If they grow a little bit slower, it's worth a little bit less. Right? There's no mystery in that. Now let's look at discount rate, and I think this is the one that will make the most difference. Your base case now is on the far right.
Yes.
20% discount rate gets you to 326. If your discount rate's 16%, now we're at 640, which is higher than where the stock is today. If your discount rate is 14%, you're now almost $1,000 a share, and at 12%, it's $1,600 a share.
That's incredible.
Right? So the discount rate really matters. I think 20 is too high. I think 12 to 14 probably is the right place.
So safely you can say 1,000.
I think so. Yes. Using your assumption, using a discount rate that's reasonable, I think $1,000 a share is the Pejjy Tesla business valuation number today.
Yeah.
Okay.
Yeah. And it's crazy. Everyone is now talking about Tesla hitting potentially 1,000 next year, which would be crazy. Which, I mean, I'm not ready to see that number, but if we're putting all this in the chart and discounting it back, including the Robotaxis and Optimus,
yep,
this doesn't sound crazy at all.
This is what analysts should be doing. They should be modeling it in this way. What most analysts do is really only consider the earnings for next year, maybe the year after.
Let them. We need more buy
Yeah.
opportunities. I need more shares. Let them. But
Right. And what I
That's
say to
amazing.
people, if you disagree with these numbers, run these numbers for yourself, right? Build a model, run it for yourself, and you'll see what it comes out to. And hopefully today we're showing enough variability here where people can kind of get a sense of where the biggest impact is. Let's look at a couple of really big things that make a huge impact. Let's look at share buybacks.
Oh, yes, my favorite.
Your base case now is the second one second from on the left side, 326. That was buying back 30%, using 30% of the free cash flow and buying back stock with that. If you don't buy back any stock, if you just let the cash accumulate, your present value per share goes down to 312. Not a huge difference. But you can see if as you increase the buyback percentage to 50 to 70 to 90, now you're increasing the present value of the shares, because what's happening is the company is buying back shares cheaply in the early years. And therefore that's boosting earnings per share over time. And you can see the shares outstanding actually go from 5.4 billion shares in your base case out to only 600 million. And this is 2064. This is ways out there.
My God.
If you're spending 90% of your free cash flow buying back shares, over time you buy back a lot of them.
Oh yeah. I think Apple, they do what, 30%? 40%?
Something like that. Yeah.
Yeah. But it's like 90 billion a year or 100 billion a year, which is crazy. Wow.
Yeah. Buying back stock is a good thing to do over time. If you're looking to return capital to shareholders, it's more tax efficient than dividends. But the question is there something even better? And so let's look at the next page. So here we're varying the net return on cash, and I put /Bitcoin. In the first two columns on the left, we've got your base case, the second one in, the 326. That was assuming 5% return on cash, and I knocked that down to 3% to see what the difference would be. Either one of those two, your cash balance in 2064 is 72 trillion or $91 trillion. Now, that's 2064. That's a long ways out. Let's bring that back to the present. That's $9 to $11 a share of cash. Okay, so not crazy. But look what happens if Tesla decides to retain their cash. They're still buying back 30%, by the way, using 30% of their free cash flow for buybacks. But the other 70%, they're just putting now in Bitcoin. And let's say Bitcoin averages a 10% return. Now you increase your present value per share to 421. Let's say Bitcoin returns 12.5. Now you're at $500 a share. And if Bitcoin returns 15% per year on average, you're at 632. Particularly if the growth rate on Bitcoin is higher than the long-term earnings growth rate, then Tesla should be buying as much Bitcoin as possible. If Tesla's long-term earnings growth rate is higher than the growth rate of cash or Bitcoin, then they should be returning the cash to shareholders and just letting the company grow, right? But if they are accumulating cash on the balance sheet, if it's not growing rapidly, you got to get rid of it because it's causing a drag on the company. If that cash on the balance sheet can be productively invested, then keep it there. Does that make sense?
Yeah.
Right. And you can see that by 2064, if they got 15% on Bitcoin assets or whatever, they would have 408 trillion in cash.
That's insane.
Now, again, the present value of that's like $45 a share. So you have to always bring it back to the present. But we're talking about colossal sums of money in the future that they're going to need to figure out something to do with that. This issue of what do companies do with their profits is a major one. And historically, we've gone from, pay a dividend. Investors want a return on their capital, to, in recent years, no, that's not good. Let's buy back stock. It's more tax efficient. That way, the people that want to sell can sell and everybody else gets to keep their stock and they don't have to pay taxes on the income, right? And that's been the case now for probably 20 years that people have focused on that. And by the way, Warren Buffett purchased Apple stock when they started to buy back stock.
Interesting.
And he's done very well with that. So even though Apple's growth rate dramatically slowed, the act of them buying back stock and returning capital to shareholders that way made the remaining shareholders have faster earnings per share growth. And the stock responded to that.
Yeah, I'm very excited for buybacks. But I don't think we'll see it until 2028 or 2029.
Right. They should not buy back stock if they need this capital to expand their business.
Yes.
That's job number one. And also as a bit of a hedge against bad things happening in the world.
Yes.
Right. You need a certain amount of capital to guarantee that you don't have to go to the market for capital at the worst possible time.
That's true.
Right.
Absolutely true.
And the Warren Buffett approach is to be have such a fortress-like balance sheet that you are the lender of last resort, even to banks, which is what he was during the financial crisis. So the idea of retaining this capital on the balance sheet is great, but it's only good if you can earn a decent return on it. Otherwise, it's causing a drag on your results. And it's possible that Bitcoin is such an opportunity as a store value asset that can actually materially appreciate over time. There is about $450 trillion of assets in the world that are a store value, whether it's gold, whether it's real estate, bonds. So
450 trillion.
Yeah, and
That's
Bitcoin
insane.
today, just over 2 trillion, is just a small percentage of that. So Bitcoin has plenty
Oh
of
yeah.
room to start gobbling up some of that capital.
Oh yeah. Oh yeah. Oh yeah. I've asked many times on X if I should sell my Bitcoin and buy Tesla, and this is the first time that a lot of people were saying that no, actually increase your Bitcoin. And I'm just like, huh, that's interesting.
Yeah, they're two very different things. Tesla certainly has a bright future ahead of it in terms of potential for business growth. Bitcoin potentially has a bright future ahead of it as a potential for this migration to digital capital. And
Yeah.
if that happens, then Bitcoin will do very well if the world
Yeah.
starts to adopt that as a form of digital capital and take money out of existing things like gold, real estate, bonds, and stocks
Yeah.
and migrate it to Bitcoin.
I think Trump wants to make it. He wants to make crypto, the U.S. the crypto capital. If he does that, oh my God.
Well, and then every other country would be forced to respond. Otherwise, they could be left in the dust if they don't.
Yes. Yeah. And watch
Yeah.
all the values go up. It's going to be crazy if
Yeah.
that's what will actually happen. Oh.
Right. Yeah. People will refer to this as game theory, but the idea is that you want to be first or early, not last.
Yes.
Right.
Yeah.
It's like going to a party and there's, cake and drinks. You want to be early to the party to make sure you get your share of that. If you're late, you may not get anything.
Yep.
Right.
Yeah, I mean, I've stopped buying Tesla stock ever since they went over 400. So my cash I continue to accumulate cash. So I'm just like, maybe I should buy some Bitcoin or something. Maybe that'll be my Christmas gift.
So what I
Interesting.
did here now is took the liberty to Cern adjust some of your assumptions.
Cern Adjust.
So if you
All
go to the next
right.
page, okay. Now I didn't change any of your underlying assumptions in any of the 5 business units.
I'm just
Right?
glad you brought down the discount rate. Yeah.
Yeah. So I brought down the discount rate to 12%. So the first column
Like
there is
that.
your base case of 326. If you agree with me that Tesla's discount rate over this time period should be maybe an average of 12%, maybe today it's a little higher, but long term it'll come down 12%, then your base case really is about $1,500, $1,600 a share.
Like
Okay?
today's value. Today's like what Tesla should be valued today.
Present value today based on your
$1,600.
assumptions in your model. Yep. Which I think are extremely conservative in many regards. Your energy, your Optimus, and your
Wow,
Robotaxi numbers are conservative.
that is insane. That's
Okay.
that's already a 4 trillion market cap.
Yeah. Okay.
Wow.
Now, what I did then for the final 3 columns here is increase the rate of return on the cash, or I'm assuming Bitcoin. If it was 10, 12 and a half, or 15, you can see what that does to your present value number. So there's
Incredible.
a strong case to be made here that Tesla should not buy back stock, or any more than 30% that we have here in this column of the row above, but keep that cash on the balance sheet, build a fortress-like, company, right? They'll never need capital again. And if they can get that kind of return on their capital, then they should keep it. Anyway, that shows you kind of the sensitivity of the model to various things. Hopefully it gives your viewers a good appreciation for what matters in terms of valuation.
Yeah. Yeah. I mean, guys, yeah, 20% discount rate doesn't make any sense. So 12 to 15% max, 15%, and that's the max. I like the fact that CERN put 12 here, which is it's realistic in my opinion.
Yeah. Particularly since we're looking at a 60-year period. Tesla right now is more volatile, but eventually it'll become a much bigger company with more stable earnings. The volatility will come down, therefore the discount rate will come down too. Now, we've answered then sort of, what's the present value of Tesla shares today, but let's now take a look at what the future value of shares could be at different points in time.
Here it is.
Okay. So again, this is based on your assumptions, right? Right. And what you might want to do here is think about this. So your 2025 number is based on
Yeah.
your assumptions for the company earnings in 2025 and applying a PE multiple to it. But even Wall Street does look out a little bit, and they do consider future growth. And so maybe our PE assumption here is conservative, and therefore that value is low in 2025.
Yep.
What you could do is say, well, let's give Wall Street credit and they may look out a year or two. So really your 2026 or maybe even your 2027 number can be pulled forward a little bit, and the stock can reflect those future earnings, right? So if Wall Street's comfortable that Tesla's going to produce the numbers that you anticipate in 2027, they may begin to price that in 2025.
That's what you're saying.
Does that make sense?
Yeah.
This chart assumes that they're only pricing it in at that year. But Wall Street is a forward-looking machine to some degree, not as forward-looking as we just were in the previous analysis, but to some degree they are looking forward a little bit.
12 months max, maybe.
Yeah. So if you wanted to time shift the scale here on the bottom a year or two, then you could say, okay, the Pejjy model says that in 2025, which is really showing 2027 on here, the Tesla fair value could be 800 and something per share. That's certainly possible. That wouldn't be crazy.
Yeah, my official price target for 2025 is 575. Let's see. And for 2 years straight, well, I thought I was bullseye on my 2024 stock price prediction of 350. Well, not anymore now.
Yeah. It sounded crazy at the time.
Oh yeah, it was insane. People, the funny comments that I was getting, they were like, "You're dreaming." I'm like, "No, I don't think I'm dreaming." And now they're calling me bearish, and now calling myself out sometimes on it. But
yep.
And I think 575 for 2025 is also pretty conservative with all the things coming, and unless there's some black swan event that we don't know of, but
no, there's always that risk.
There's always that risk, yeah. But I mean, other than that, I think it's gonna be, 868 wouldn't be. I mean, I wouldn't rule that out happening in 2025. That's the crazy thing.
And so the way to look at that is to say, okay, you're probably looking at about 18 months out on this chart. It's between the 420 and the 868, gets you to 5 something. So you could say Wall Street's looking 18 months out, and that gets me to the average of those two numbers. And if you look at maybe the middle of next year, 2025, then maybe looking at 2027 numbers, and that gets you to the 868 a share.
Yes.
So just depending on how you want to look at that in terms of pulling that number forward. But then as we go out to 2030, you're at 1,700 a share, and that may be a 2028 number, right? If you pull it forward a year or two. And then if you go to 2035, your numbers get you to a $6,000 stock price. And again, pull that forward a year or two, that may be a 2033 number.
That's insane. Oh my God.
And again, this is just based on your conservative assumptions, particularly for Optimus, Robotaxi, and energy.
Yeah, energy. I got to double check. Robotaxis, that also needs to be looked into even more. But that's crazy. Sir, what is your price target for 2025?
My 2025 number is low because again, my model, like yours, has a fairly slow ramp of some of these new businesses. I would recommend people look at AJ's work if they're looking at more near-term numbers. He does a great job of analyzing the company and projecting out quarterly earnings.
Yeah, shout out to AJ.
Right. I would rely on his numbers more for their short-term than mine. I'm not looking short-term. I really don't concern myself with 2025 numbers. But my numbers on this chart out in 2035 get you to about a $30,000 price.
Wow. Yeah, that's right. I remember we did that one video. Yeah. I remember that.
And by the way, my Robotaxi numbers are 50 million, and my bot number in 2035 is 208 million. And I think that's conservative, right? So just on the strength of that, you can ignore autos, energy, and service. Doesn't matter. Those two businesses, particularly bots, is what matters. And I think there's actually some upside on the 200 million number by 2035. I think that actually is pretty conservative.
That's crazy.
Yeah. My chart here looks like your shirt that you're wearing today.
Yeah, I bought the dip.
Yeah. That's a great shirt. Everybody should have one of those.
Yeah, there we go. Discount code ATH to get 10% off. Had to do it. It was right there. Yeah.
There you go. I teed you up for that one.
Yeah. No, that's crazy. That's absolutely crazy. Wow. So,
Of course, nothing's
conserv-
guaranteed. These are just, projections, illustration of what could be. But again, I encourage people to create some of their own numbers, put your own thoughts on paper. We've kind of showed enough on each screen that people can do this and build their own. It's not that complicated. More
and
people that do
yes,
it, the better. We will learn from everybody if we all do
yeah,
this.
yeah, and obviously, guys, this is not financial advice. None of this. This is just, you know, two guys who loves numbers sitting down to see what Tesla stock could potentially be worth in the future, with
That's
all
right.
the sectors and businesses and the incredible innovation that they're doing. And it's funny because when I sit down with a lot of Tesla influencers and analysts, they all say the same thing at the end, that it's gonna be it's gonna be one of the biggest companies in the world, or the biggest company in the world, and the numbers get nutty. It's crazy how we all come to this conclusion at the end, whether we think it's a conservative number of 6,000 or as high as yours of 30,000, or some are saying could be Warren his last name
Redlick?
Ridlick,
Redlick?
yeah, saying 100,000 or something. And I'm just
Yeah.
like, we all come to this conclusion that it's going to be a wild number in the future.
Yeah, and the simple reason is that when you think about the business model that is Robotaxi, you're taking a vehicle and making it more productive, and you're making it autonomous, so it can just earn revenue nonstop, right, for a long period of time.
Yeah.
Here's a simple analysis that I go through with people: is when Tesla sells a vehicle, they make, let's say, $5,000 in net profit. With Robotaxi, let's say they make $5,000 per year, and the car lasts 10 years. They're making 50. They're making 10x the profit on Robotaxi than they would if they just sold the vehicle. So right there is a massive change in the business model.
Yeah.
Right. And if it is the kind of market where lowest cost producer, best technology wins, that sure seems like Tesla is well positioned for that, to take a larger market share of the Robotaxi opportunity than they do of selling autos.
Yeah.
Right.
I
And then you
just, I
think about
just,
humanoid bots. Right. Let's say a humanoid bot makes $5,000 a year, which I think is very conservative.
yeah.
And the bot also has a lifetime, let's just say, of 10 years. But for every car you make, you can make 20 or 30 bots. So if a Robotaxi is 10x cars, then bots is 10x times 30, right? For the equivalent number of vehicle production,
Yeah.
you can make 30 bots. So it's like 300x today's opportunity with Tesla selling a car. Robotaxi is 10x, and bots is like 300x.
Incredible.
That is what you have to wrap your mind around, in terms of that is why we're so excited about this opportunity. Now, the specifics of those numbers could change. Maybe bots aren't as profitable as $5,000 per year. Actually, I think they'll be a lot more than that, at least initially, for a long time.
Yeah.
And I think Robotaxi also has the potential to be a lot more profitable. And I also think that Robotaxi actually will not make most of its money on the fare revenue or the rides. It'll be from other services that are layered on top.
Yes.
Right. Much in the way
Yes.
today that the iPhone is a platform for all kinds of software and services, Robotaxi becomes a platform for all kinds of other services on top of it. And that's where I think the Tesla and other companies will make even more money, or potentially. Yeah.
Yeah. And
So
the
hopefully
crazy part
that
is,
gives a bigger picture in terms of what, why we're showing these crazy numbers. It's because it's such a fundamental change in the business model.
yeah. And
Yep.
and on top of that, I would like to add that, it's like, who is actually the competitor when it comes to, for example, robotaxis, right? Like I can't think of anybody. Like if it's Waymo, well then it's going to be so expensive to scale, and it's going to be very hard to compete with 20 cents per mile, unless Tesla agrees to license the technology out to other competitors, and they can also do the ride hail sharing as well. But that's a whole different business as well. Like licensing is just it's a much bigger business.
I think they will. This is
than-
interesting when you think about this, because Tesla has told us now for years that we'll be able to put our own vehicles in the Robotaxi network. And they've told us more recently that we'll be able to buy cybercabs. When I run the numbers, it is clear that Tesla could make more money if they did this alone, without any partners, without us owning vehicles. To me, this is Tesla telling us that we recognize that this is such an incredible opportunity that we need to spread the wealth around, because if they take it all for themselves, they're going to be so profitable and so enormous that they become this big target. But if they create a way for all of us to share in that, not just as shareholders, but also as owners of vehicles, robotaxis, and probably bots as well, that to me is them recognizing how incredible this opportunity is, and they're creating a scenario where millions of people can benefit from that, particularly on the bot side, because there'll be a lot of people potentially that lose their jobs. And so how could they replace income? Well, if you own 5 or 10 bots, you could replace your income. They need to give people a way to do that. And also, it's the same case with Uber drivers, that they may lose their income from being an Uber driver, but if they own a robotaxi or a few of them, that's a way to make up that lost income. And to me, Tesla is very clearly telling us that they recognize that.
That's an interesting point. I mean, what I thought is that maybe the reason why we can buy the cyber cabs and all these robotaxis, instead of them operating it, is to remove the liability off them. I mean, that could also be the the thing, or the headache, get that headache of operating off them. But what you just said is actually that makes more sense. That actually makes
I
more
think just
sense.
from an economic perspective, they will need to find a way to share the wealth, and need to give people a source of income. And the robotaxi and the bot can provide both.
Yeah, it's like the internet. Like it's like the internet. Like everyone thought the internet is going to take everyone's jobs, and then actually the internet came and gave so many jobs.
That's right.
The bots and the cyber, these next generation things, next generation products are going to be the same thing. It's going to be abundance of work. It's going to be abundance of making money however you want to make. You have the internet, now you have the bots, now you have all these autonomous cars that you can operate.
Yeah,
it's going to be a crazy time.
Yeah, and I would say too, it's smart from Tesla's perspective, particularly with the bot, is to allow people to have their own bot fleets and provide their own services around that, right? So my bots, for example, might specialize in building houses or something for people. And it's good for people to be able to build a business around that, rather than Tesla being in control of every single piece.
Yeah. And
there's
this
more
way
than enough money for everybody.
Yeah. And this way they have more of a free motion to do other things. They're not tied down to many operations and stuff. They can just...
That's right.
Because I don't know what's after the bot. I know we saw some Easter eggs, Plaid. What is it? No, Plaid Airways or something. And I'm just like, are they thinking about innovation now? Like, what are they thinking about now? What's with this Easter egg? So let's see. As long as Elon is around, there's always going to be something after the bot. There's always going to be something after the bot.
I would love to know what's in his mind. I'm sure there's many things that he's thought about that right now he just can't work on. An efficient HVAC system, for example, is something that they've identified, and they said we don't have the bandwidth to do that right now.
Yes, yeah, they have a lot on their plate.
Yeah, that's going to be exciting. And right now we've just modeled these 5 businesses. There are more. There's 2 that we didn't model today. The AI auto bidder business for energy, and the distributed inference business, AI inference. Both of those are interesting too. We skipped them because they're relatively smaller, I think, relative to the other ones. But who knows? They could be much bigger than I realized.
Yeah, and honestly, I don't know how to calculate those. The auto bidder and the AI inference, I have no idea how to calculate those. Those are like I just have no idea.
I've built models for both. A year ago, they were both kind of a shot in the dark, but at least it gives me a base to work from.
An idea.
And since then, I haven't received any really new information, so there's no reason to update them. But I did take a crack at it, and I see some promise for it. But I had to make a number of assumptions that I'm just not entirely sure about at this point.
The main things: robotaxis, the bots, energy, autos. The main things: the bots, robotaxi. Those things is what's gonna take the stock, the valuation of Tesla, to extremely high levels, which is very exciting. And what Wall Street is now slowly getting in stock. I never thought in 2024 we could potentially be hitting almost 500 or something like that. Almost, it was crazy. It's crazy. Sheesh.
And again, as we showed today, if they can execute on Robotaxi,
which I think they will,
drives a significant value creation for Tesla. And if they can execute on bots, that drives another significant value creation. Again, the 10x, 300x versus selling EVs today.
Mind-boggling.
That's what we're talking about.
It's mind-boggling.
Yeah.
300x. Just nutty. So it's just nutty numbers. It's numbers that you just, stare in the horizon and say, can this actually happen? But it's Tesla.
And we don't know. And you're right. I mean, we don't know for sure, but we are monitoring and watching a company very closely that's executing. There's a lot of information shared on Tesla every single day. I can't think of another company that's more closely watched than Tesla.
Yep.
And so the great thing about that is we get to monitor the progress in real time.
Yeah, and it's incredible. It's honestly incredible seeing how, the FSD technology is developing, how the bot is coming along. Just the recent video of it like slipping off the hill or something, catching itself, which was absolutely crazy.
And then we find out it was walking blind.
Yeah.
It wasn't even using vision.
This is why I think Elon was talking about 2026 of somewhat of a mass production of this bot stuff, which is just incredible. I don't know. It's exciting. It's really exciting. Let's see how the future is going to look like. And I'm glad we're part of the story, I'm glad we're part of that awesome story.
Me too.
Sheesh.
Yeah, it's great.
Awesome.
It's a lot of fun.
Awesome. It's a lot of fun indeed. And is there any last remarks you want to say, Cern, before we close off?
I think you've built a great valuation model that is conservative. And I think you've shown your viewers different elements around that. I would encourage you to refine your assumptions in a couple of those areas.
I'm sure the comments are saying that.
We can make the changes and see how it looks. And of course, welcome feedback to this video. Please leave your comments and tell us, what other assumptions we should make and where we could change things, and we'll consider that. And at some point, we will update that and share it with you all.
Absolutely. I'd love to have Cern back as many times as possible. Love it.
Happy to be here. Thank you for having me.
My pleasure. Everyone, please go follow Cern on his X. The link is in the description. I'm a big fan. I do follow him. Has a lot of juicy, very detailed work that makes me pull out my popcorn and just read what he has to say. It's good stuff. And I highly do recommend it. And if Cern did had a YouTube channel, obviously we would have had the link of that as well. No. But for now, his X has a lot of good info, and I recommend all of you guys to go and follow him there. Cern, thank you so much for coming on. Really appreciate it. Looking forward for you to come on again, because it's a pleasure.
Absolutely. My pleasure. Thank you for having me, Pejjy.
My pleasure. Always give good insight, great value. And thank you for doing this. I know the comments, probably some people have roasted me, but it's okay. we can adjust and increase it.
That's right.
Yeah. So thank you for that. And make sure everyone smash that like button, hit subscribe if you haven't already. And I shall see you guys in the next video. See ya.